Inversion, Impeachment, Imbeciles. What's up, everybody? Welcome aboard. It is Bubba's Bottom Line for Sunday, Super Bowl Sunday, February 2nd, 2020. Got the big game tonight, and of course, we'll have our big prediction later. But in the meantime, impeachment rolls on, and of course, will it be over by the State of the Union on Tuesday night, or will it continue on? And of course, you've got this one of the most ridiculous partisan things in the history of the United States of America. Just totally ignorant. But of course, listen, how can you blame a party that's trying to manipulate who the candidate is with? Of course, we see that once again, Bernie Sanders is not going to get the super delegates. So once again, he'll be on the outside looking in after running his campaign. Of course, I don't believe that anybody's going to beat the incumbent, but we do have a theory on a potential conspiracy later, which we'll talk about in our commentary. But nobody's talking about the inversion of short-term money again, as the 10-year notes are now cheaper than the bills, the bills and the 3-month bills and bonds. And it's interesting that it has not become another topic of conversation. Right now, we're of course focused on the coronavirus, and of course that is the big blame for the big sell-off last week. And of course, it's amazing how we can pick anything that we want to blame. Okay, but of course, price is what determines markets, and it's not like the markets didn't deserve or shouldn't expect to see some sort of sell-off at some point. Okay, so again, you want to call the virus a black swan event. Well, it wasn't a black swan. We already knew about it, so it didn't suddenly show up. It is causing some havoc in some areas, which we'll talk about in our commentary in our market segment. But again, markets don't go down because of the coronavirus. They go down because people want to get out, and they might be creating some fear on their own. And of course, that's been the case in the history, because what always drives markets? The emotions, the others. Okay, and of course, we look at what's going on, and of course, earnings have been rather mediocre, other than Amazon. So if you want to continue to look at reasons why, you have a market that is priced for absolute perfection, and you've got nothing but people pouring in. Okay, at the same time, we're having just a small little problem with the repo rate, as that rate is exploding, as the overnight lending rate to banks, okay, that are borrowing every night. Again, I will say this again. I think we are in the very, very early stages of a recession. I have not changed my viewpoint there. B, I would love to see a true audit of the banks, okay? And again, I have no proof, so this is not an accusation. This is an opinion. And my opinion is that many of the banks that they say are strong and safe and sound are not. Many of them are leveraged to the hilt and well over what's supposed to be the 10-to-1 rule. Okay, but again, we never get to really know. This is the problem when you're dealing with a supposed private organization in the Federal Reserve. Okay, which is an absolute joke to begin with. Okay, and of course, we did have the Fed last week. And again, it's always nice to listen to the Fed. It's like, what jibber jabber is he going to talk about now? And I think what you're really seeing is more than likely the indication that there's probably going to be another rate cut here. Okay. Now, again, from a theory basis of where the rest of the world is, I could see there could be a cut, and it would make sense. Okay. But from a free market and from a money and a price position, it does not make sense. But of course, this is the work of the central banks and of course the Federal Reserves around the world. Okay, this is their way of trying to control and manipulate. Okay, I mean, you're going to see tonight. Okay, the People's Bank of China is going to instill $174 billion of liquidity into their system. You think they're not worried about how the markets may open tonight? Do you think they're not worried about the panic selling that's probably going to take place? So they're trying. Now, again, we'll see. We don't know yet, okay? But we'll see how indeed those markets do start to trade tonight. And, of course, we'll see stuff starting at 6 o'clock Eastern time when our markets reopen. Right around as the Super Bowl is kicking off, the markets will be kicking off at the same time. And it should be interesting. It's too tough to call how the open's going to be. My guess is that they're going to open lower. That would be just, again, that's just simply my guess, that we could see some significant downside on the opening, because certainly China is panicking a little bit here, but we'll see. Again, they could certainly open higher. I would prefer to see it at higher open, even though I'm personally short, because I'd like to be able to sell some more. But again, as I mentioned earlier, of course, the DNC is trying to block Bernie. Okay, and of course they will. Politics in general, whether you're left or you're right, are all phony. Okay, and all crooked. And where you've got all of these great programs that were really meant to do what? To buy votes. Okay, you've got these great programs and these some of these perks out there and some of these benefits. Okay, to buy votes without spending your own money. With spending, of course, our money. We get the pleasure of funding many of these ridiculous programs that are out there. So I think that's that's what we're seeing now. Of course, we've heard this over and over and over again, and that is that this time is different. Okay, and the markets are different this time, and the circumstances are different. You know what? All markets always end the same. They always end in a heartbreak. Okay, but if you remember, okay, which is why we hedge. But if you remember the simple fact, no matter what's going on today, no matter what happened yesterday, no matter what happens 10 years from now, the market should continue to average an 8 to an 8.5% gain year over year. Okay, we know it's not every year, but year over year, they have gained an average of 8 to 8.5%. So that would be the statistic that I would play, which means that even if you're somewhat concerned, if you're in some strong companies, you should not be puking yourself out right here. And of course, there are other issues that we're seeing. And of course, one is the population growth. This is the lowest population growth in history for the United States. So we are now following in the tracks, which we've said would happen here all along, of Japan. Okay, because of course Japan was the first to do this QE program in 1989 or so, when they puked up and bought the Pebble Beach Golf Course for the largest single real estate purchase in history. And of course, that was the top of that market. So again, you're seeing reasons why, so no matter how much money you're making, it's still not enough, because although we continue to hear the no inflation tactic, of course, that's a bunch of crap as well. Again, it's some silly metric that these guys use. But, again, I keep hearing the words ringing out that this time is different, and it's a different market. You know what? Everything comes down to the same thing. Life comes down to two things. One of them is money, okay? And you're seeing an issue with money, okay? And that's what it comes down to. I mean, credit card debt continues to soar. So, yes, we could have this great consumer confidence that they like to talk about. And of course, typically, if you go back in history, again, all you have to do is look at history, because history does repeat itself. Just like the markets repeat themselves, so does history. And if we go back in history, what do we see? Okay, is that it always comes down to money. Okay, and when people are getting afraid of losing their money, guess what's going to happen? They're going to start selling out. So we've seen this start, and the question is Is this the top of the market, or just another opportunity to buy? And again, we're not going to predict it. We think that probably, based on what I look at, I would say the tops are in. But certainly, I am still going to continue with the mechanical method of trading. And of course, again, we'll cover more of that in our market segment. But of course, you've now got Bloomberg. Okay, they make him out to be such a hero that he built from nothing. He did get, I believe, a $10 to $20 million settlement, 40 years ago from Solomon, I believe. I'm not sure that that was Solomon, but one of them, he did get a gigantic settlement. So it wasn't like he started from scratch, okay, and had nothing. But in the meantime, I mean, like him or not like him, he's proposing a potential, $5 to $8 trillion tax on the rich and on corporations. It's amazing how when the rich get there, okay, now they want to tax everybody. It's amazing how many years they all spent stealing that money and hiding that money and paying lawyers and accountants millions and millions of dollars to hide that money. So again, I think, you get into, I think we get a false sense of a lot of things. And of course, it certainly looks like we have the makings of just another bond bubble. I mean, it seems to me the entire system is in a bubble. Now, again, bubbles have become more prevalent. We've had them obviously since the tulip mania, but since the Federal Reserve has become so active and gone totally against what their mandate is supposed to be. I mean, you heard Jerome Powell say what their mandate was the other day, which is employment, okay, and overall liquidity. And of course, they're way past that, right? They're manipulating markets. They're basically what they have done, as they have forced every single investor into one asset class, which is the equity markets, okay, which always ends in a horrible disaster. Okay, but of course we do have, again, these bubbles growing, and of course, I mean, 10-year at 1.5%, inverting. The 3-month bills are at, like, I think 155. Okay, the 6 months I think are at 156. So again, where is the outrage? Where is the crying of the inversion of the yield curve? Okay, and of course, to top everything else off, you've got money printing going on everywhere. These guys can't get their currencies down cheap enough. Okay, and so again, you've got the same issues always apply. The only it's like only the names were changed to protect the innocent. Okay, but of course, again, we do have the State of the Union this week. It ought to be quite interesting. But again, I believe you will see that I think the president will come out on top, and I do believe you'll see that, barring some disaster, which will be part of our commentary, I believe you'll see a landslide victory in November, because again, when you've got the party on the left side that is so far left and not really true moderate, and they can't even figure out who they want, but they are trying to manipulate their candidate, we will see how that does play out. In the meantime, this is Bubba's Bottom Line, Todd Bubba Horowitz, and we're going to step out of here for a break, and we'll be back with more of Bubba's Bottom Line right after the break. So everybody, it is Super Bowl Sunday, and of course, I hope you're going to have a great time and enjoy the game, and I want to remind you that next Saturday, okay, on the 8th of February, we're going to be doing our micro mini futures portfolio management, making new highs every week, baby. They've been just beating the crap out of the market, and of course, we just want to share it with those of you who are interested. All you got to do is go to BubbaTrading.com, and you can download the link. It's a free webinar. Certainly, you can step by and see it. And of course, the following week we'll be doing marketing plans and hedging for farmers. So those are on the website as well. And again, remember, it's all about you. And if you're not happy with your current broker, we got the right answer for you. You can go to Tradier. Okay, we have a special link that you really pay zero commissions. Okay, not that maybe zero commissions from those others that are really 65 cents a contract. Trading options, you can get truly zero commissions. Just email me at bubba@bubbatrading.com. I'll give you a hand. And of course, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Let's get back to Bubba's Bottom Line with our market update and myself, Todd Bubba Horowitz. Welcome back. It is Bubba's Bottom Line, Todd Bubba Horowitz, and what an ugly week it was last week. And of course, when we look at it now, we were short. So again, it wasn't, totally ugly. It was nice to be short. It didn't feel so good on Thursday, but we did reverse, obviously. And as you know, I talk about it every day, what our positions are. And we did reverse in equities. And of course, they were lower, but certainly Thursday looked interesting. It almost looked like on Thursday that somebody knew Amazon's earnings before they came out. Okay. Because the markets were lower and they took off and they exploded later with the NASDAQ really exploding. And of course, Amazon did go up over 200 points in the aftermarket. But I think this is the interesting part. Okay. Friday, Amazon was up, but it ended up picking up about 108 or 110, whatever that was. But what I found interesting is that the NASDAQ was basically almost lower all day long. And the NASDAQ got crushed on Friday. So you're seeing in the market, okay, as you're seeing, and just by the way, on my Monday night call, I said, and I've said here before, that before we would want to be really negative of the markets, what we would want to see is a big sell-off followed by a rally, and that rally failed where it should. Well, I think you've seen that the rally failed exactly where it should have. Okay, it filled the gap from Monday, came back right to the point where it should be, and turned around. But my simply, when would you ever think that Amazon would be up over 100 points and the NASDAQ will be down over 200? I mean, that's an interesting anomaly that we have to look at. I mean, obviously, you want to buy strength in the strong stuff and sell weakness. And certainly the markets look very, very weak. They look vulnerable here. Okay. Now, we'll see how it trades out. Again, we're short. So again, we're looking for it. So again, tying what the algorithms have to what I can see in the chart, we may be indeed on our way heading lower. And this may be the sell-off that we've been looking for. It may be just a temporary pause in the market. Again, we're willing to reverse. We're not saying it can only go down. We'd be willing to reverse if we had to. But right now, we have just turned short. We've just turned short Apple. Now, we were long Apple from 204, okay, and just sold out at 310. Okay, so not a bad trade. But a lot of the things that we have are now shifting to the short side. So we're building more short positions. You continue to see Treasury bonds rally. And boy, did they gallop a little bit on Friday. Okay, again, fear assets, interesting. But yields continued to go down. And of course, that is when you're buying a lot of the bond futures, people looking for safety. So we've seen an enormous amount of movement in the bond market as they break out once again. And of course, it wasn't that long ago that they said, we don't need the 30-year bond anymore. We don't need the money. And of course, now they're bringing in a 20-year bond. And don't be surprised if you see a much longer-term bond being floated one of these days, because certainly they're going to need money. Okay, government's going to need money as always. Okay, from the way they, if any of us ran our business like they run the government, we'd be broke. Okay, but we don't have our own printing presses. Gold continues to impress. Now it's interesting because gold is setting up for another bullish run. Looked like it wanted to test 1,600 on Friday again. It looks like we're going to test that overnight high that was made on that Panic Tuesday about 2 weeks ago. 1613, that basis, and again, I'm talking basis, the April futures. I think you'll see some action here, but gold certainly looks bullish, whereas silver does not look anywhere near it. Silver looks like it still wants to continue into a downtrend, which we are. Again, we're actually net long gold, net short silver. So, but again, just looking at the chart, it looks like that dead cat bounce we had Thursday, Friday should be it. Now, again, we'll see what it plays out like, and again, we will not be stubborn. Crude oil crushed. Okay, and again, we said we're looking for the high 40s. We're looking for the high 40s. Okay, now again, wouldn't be a surprise to see it pop to 54 or 56, but I think that's just another selling opportunity. The overall crude just looks brutal. Okay, and now this is one of the products that will have some effect by the virus, which is it's going to slow down transportation. It's going to slow down consumption of fuel because it's already slowing down some of the flights overseas. It's going to slow down imports and exports, okay? Because again, that's one of the problems. So from a fundamental standpoint as well, certainly we could see significantly lower prices in gold. Copper continues just to get pounded, okay? Which is just another warning sign. Dr. Copper, if there's no demand for copper, there's no demand for building, there's no demand for manufacturing, it just doesn't look very good, okay? So again, along with natural gas, look, at some point here, it's been a fairly mild winter, but, we'll get a cold snap, you'll see natural gas pop. And certainly, if you're a hedger or you're a user of it, okay, and you want to hedge your costs, certainly there's no better place to hedge than here. Okay, hedge your, obviously, the long side. Because again, how much cheaper is it going to get? And what you don't really care, what you can make with it priced at these levels. So that, again, one of the things about hedging is where do you hedge at? Okay, well, if you're hedging for production that you're going to use it, why not hedge here? It's a hell of a lot cheaper than it was last year at the same time. Okay. Grain markets look brutal, except for wheat. But corn, corn has looked okay, and it's really stuck in a wide consolidation pattern. About 377 of 390. Okay, basis March. Soybeans look awful. They make a new low every single day. Now there's going to be a bounce here at some point, but for now, they make a new low every single day. Okay, it is scary. And as we said last week, if 9 breaks, 880 is in play. Well, now 880 broke, 860, 840 are in play now. Again, 840 would be a disaster. And again, we don't know if we'll go there. We're short them. Okay, we're short corn at the moment. Wheat, again, looks good. It held. It was under a little pressure on Friday, but it looks okay. And of course, they're affected by the virus as well. Again, the China deal was a big non-event, as we always said, from day one. And now here, 700 days later, okay, it's a non-event, okay? They didn't bounce in the beginning, but they are being affected by this virus because, again, this goes to trying to transport the goods back and forth. And, of course, you've got the meats that just look awfully sick, okay? It is brutal, okay? If you're looking at these, we thought, and we were long. We got short last week, okay, early in the week. Actually, it was week go Friday, but again, that's always put on the tape here. But they just look brutal. Feeder cattle and live cattle broke down and just basically plummeted. Okay, there will be a bouncer at some point. Again, from a longer term perspective, right now you'd have to be on the short side. But again, there will be a bounce at some point in these markets because there always is. There's going to be a place where you're going to see buyers come in. And of course, hogs, geez, they don't look like they're ever going to stop going down. I don't know when the last time I saw February hogs in the 50s. They look bad. Again, there's going to be a bouncer at some point, but until they prove they can hold the bottom, there is no reason to think that that's going to change anytime soon. So overall for the week, excuse me, we'll look for the markets to continue to the downside, which does not mean or preclude that there won't be a rally in here somewhere. Okay. Again, remember this always. The best looking rallies are the ones that come in a market that's either turning bearish or a bear market. So keep that in mind. Be careful. Remember, volatility is your friend. And if you have, question and aren't sure, don't make the trade. In the meantime, we're going to step out and come back with my commentary. This is Bubba's Bottom Line for Sunday, February the 2nd, 2020. We'll be right back with more after the break. So, kids, Super Bowl Sunday. I hope you got a big party plan. I hope you're going to have a good time. And we should make it Super Bowl Saturday so we can get the day off on Sunday. But in the meantime, again, we've got a couple of webinars coming up you can check out. And certainly would love to have you there. And, of course, Our micros and minis have been killing it. And if you're afraid of futures or whatever, micros and minis are great. And if you don't have time to do the execution, we can help you with that too. We've got places, partners that we can recommend to you. So certainly reach out to us if you want to check that out. And of course, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And of course, if you truly want to get zero commissions, okay, and not that phony 65 cents or whatever contract, email me at Bubba Trading. We'll send you a link of one of our preferred partners as well. In the meantime, let's get back to Bubba's Bottom Line and, of course, my commentary. Welcome back. It is Bubba's Bottom Line, and it is Sunday, February the 2nd, 2020, and of course, Super Bowl Sunday. And, we've got a big battle going on right now between George Soros, Facebook, and the president. And of course, George Soros is now accusing, the Facebook of winning Trump the election. So he's going all in against Mark Zuckerberg and, of course, President Trump, which he's always been all in again. And again, I have an interesting theory of what could happen here over the next, 6 months or 7 months. And, obviously, I think the number one concern in most people's minds is not impeachment, is not who's the president right now, is really about their own money, right? I mean, at the end of the day, we care about our own capital. So as long as the markets are going up, as long as the 401ks are going up, everybody's happy. So now we start to see a sell-off here, okay? If we go into a recession, a full-blown recession before, obviously that could create a difference in the election. And you have a guy like a George Soros who is capable and has the funding and the people behind him that could create a market stir, okay? Could create a sell-off in this market. It doesn't take a lot to trigger a major sell-off if you know what you're doing, okay? And you have the money to go ahead and do what you're trying to do. You've got so many people in this country that are against it, that against the current administration, that it would be no surprise if they would try to force a recession ahead of time, or at least a big market sell-off. And again, it can be done just by the sheer nature of the panic that it could create. Again, you witness Amazon up 100 and some points, the NASDAQ futures down 200. So there can be some stuff that could go on here that could be very, very critical. And again, if you tie that together with our views on the auditing system of the banks and the auditing of the Federal Reserve, you could see a real mess get created here by somebody who's willing to put up lots of dough to try to force some kind of action. So we already know that George Soros is going against Facebook and against Donald Trump, and who knows what else he's looking to do. But again, that the last chance the left has from here is to force the economy to fail, because so far they have failed at every step to try to stop this president who they were trying to stop before he got into office. This is Bubba's Bottom Line, Top Bubba Horowitz. Of course, it is Super Bowl Sunday. So who are we going to take in the Super Bowl? We are taking the Kansas City Chiefs, okay, minus the 1. I know it's now maybe 1.5 or 2 in some places. It should close probably about 1, but we love the Chief. San Francisco is good, and normally, I would like San Francisco running in defense, but I do think that Patrick Mahomes is a magician, and I do think that they're going to manage and figure out a way to win this game. And I think we'll be coasting into victory. And in the meantime, have a great Sunday. We'll see you back here tomorrow with a Bubba's Daily Update. For now, this is Todd Bubba Horowitz. Have a great weekend. Have a great Sunday. Enjoy the Super Bowl, and go Chiefs.